Hello, everyone. Welcome to another episode of Tax Series with BudPay. My name is Ugochi Chikere. I lead the people and culture team at BudPay. And here with me, I have our CFO,
Dr. Collins Igwe.
Thank you. So we're going to be talking about the new tax reforms and how it impacts employees and employers. So I'm going to start by asking you, so how do these new laws, how does it affect employees' take-home salaries with regards to nets?
That's a very interesting question because some people are going to smile, while some people will be very upset. And why do I say so? So what they've done is, because of the increase in minimum wage, which is about 70,000 naira, and what actually means is any amount of that money you earn is not taxable. Before it was about 300K, but now the minimum wage is 800K. So what they've successfully done is 800,000 of your salary is not taxable anymore. So, however, we used to have what they call consolidated relief, which is about 20% of your net monthly gross. They've abolished the consolidated relief, and they've given you a relief of, I think, 20% of your rent, capped at 500K, something in that line.
Yeah.
So, somebody earning a gross salary of 4 million before would have had a relief of 800, less than 800,000, because I think you deduct your pension, something like that, from that figure. But now your relief is just 500K. And I think that 500K is it annual or monthly? I'm not even sure.
It's annual. The
Yeah,
500,000
the 500,000 is annual, it's not monthly.
Yeah.
So before, the consolidated relief was monthly. So what they've successfully done is, for those earning lower than 1 million naira per annum, no tax. You get your full money, I think 1.2 or 1.3.
I think 1.3.
Then as you now start going up, they've also, before there was a tax at 7% and there was a way they graduated it. But before it ended at 24, now it gets to 25. So they've increased the rates. So people like I'll call middle income earners, so let me classify them into three. Low income earners, people that earn lower than I think 1 million per annum, no taxes. People that fall between that 1.3 or thereabouts, so about 5-6 million per annum, they will see a little bit of reduction in their PAYE.
Okay.
However, people that earn more than that will see an increase in their PAYE. So what's going to happen from next year is companies would have to decide who bears that cost, whether it is the employee or the employer, because for high income earners, there's going to be an increase in their PAYE, which will reduce their net take home. So it now depends if the company wants to absorb that cost, they will pay that extra PAYE. But your gross isn't changing, but your net take home would reduce because the government is taking more money as taxes from you. So that's now left for management of each company to decide how they want to handle that.
Yeah, so what do you think for the high-income earners? How does this affect them?
It's not good for them.
Yeah, there's a marginal downward adjustment.
It's not good for them. They pay more. They have also introduced what they call benefit in kind.
Okay.
So when they give you things like free house, free this, free that, all those things now will be in quotes monetized and added to your income. So you pay more taxes. So for the high income earners, the CEOs and co, is not.
Yes.
It's good for the government, but it's not good. It's not looking good for them because either they get a review upwards to be able to put them back at par what they were earning before, or they will have to take like a reduction in the benefit, especially for those that had benefits that were not being taxed before. Now those benefits will be monetized. It's assumed that your office is giving you that money, so they'll look for the value of those benefits and add it to your income.
Yeah.
Before they now.
Yeah, so in summary, for low income to middle income earners, these new changes are largely beneficial, but largely beneficial. Yeah, so for high income earners, there's a marginal downward adjustment.
The higher you go, the more the marginal.
Yeah.
It's no longer marginal.
Yes.
The higher you go, some people can go as, for someone earning 5 million naira a month, you can get as low as 200,000 monthly.
Yes.
For someone who has a monthly gross of 5 million, the reduction in his net pay can be as high as 200,000 naira monthly. Yeah, so imagine taking 200K out of your money monthly. Yeah, nobody's going to like that. Nobody's going to be happy, but it is what it is.
Yeah. Okay, so let's look at this new rent relief.
Yeah.
The new rent relief system states that employees who rent their houses can claim up to 20% of their annual income. So what do you think about this?
Yeah, but they're not capped it at 500.
Yeah,
so typically what will happen is most people will it's just like there was a time they were saying if you have more than 2 children or 3 children, something like that. So what we'll see typically is people will just apply a relief for 500,000. You just cap it at 500,000. Yeah, because you can't be asking everybody how much is your rent, give me 20%.
But I think they get to provide valid documentation. So
yeah, but administrative wise, it's not. So if you have 2,000 employees, you ask 2,000 employees. So every year they'll be giving you what their salary is. So I mean that may not be the best, but administrative wise, it's best to just apply that max of 500 and just move on with it. Yeah.
All right. For anybody who's watching, to claim this rent deduction, you have to provide your valid tenancy agreement, proof of payment that includes bank transfers, any rent receipts available, and you also get to sign a rent declaration form.
So you want to ask everybody for that? That's what the law says.
Yes, we need to be prepared for this in case of tax audits. Tax audits. Yeah, we need to properly document all of these processes.
No, that's what it is. So let's look at it. 20% of 1 million is 200K. 20% of 2 million is 400. So it's 2.5 million rent. People paying rent. Lower than 2.5 million will not get the full relief.
Yeah.
But people paying rent of more than 2.5 million will get the full 500K relief.
And just to be clear, homeowners are not entitled to.
Homeowners are not entitled. Yes, if you live in your own home, you're not entitled to the relief.
All right. So with this new tax reform, the CRA, that's the Consolidated Relief Allowance, has been abolished. So what does that mean?
So before now, I think I said it earlier, you get a 20% relief. So if I used to earn 5 million monthly gross, my relief was 1 million. But now, they've capped that relief to 500K, which is also based on your rent. It's no longer based on your gross income now. So again, for small income earners, it may be high, they may get higher relief because if someone that was earning 100K and his relief would have been 20% of 100K was 20K, right? And if his rent is 1 million naira per annum, his relief is now 1 million. His relief is now 200K. So for someone that was any small paying high rent is beneficial, but for the people, again, like I said, this new tax law is not doing high earners any good.
No, it's not.
So for the high earners, imagine someone that is on a 10 million naira monthly gross. It was taking a relief of about 2 million, just below 2 million, because you deduct, I think, pension or so before.
Yes.
So before, it would take about almost 1.8 thereabout, but now it's just 500K. So the higher you earn now, the so not beneficial. The relief
for the relief
benefit coming year.
Well, so some people argue that this new system is a needs-based relief.
Well, it's need-based, but the figure is quite small. So based on your rent, capped at 500. So it's quite small. I mean, let's see how it will play out. The government has what they're trying to achieve. Let's see what it comes out to, and I'm very sure if things don't go well, there will always be a review in another year. So the good thing is every year now there's always a review of the tax laws. So if things don't go out well, I'm sure people would speak, and next year we'll see a review of the tax law. But for now, what it means is low income earners, no taxes, middle income earners, slight benefits, higher end earners, you pay more taxes and your take home reduces.
So aside the CRA, are there other allowable deductions?
Okay, there have always been some allowable deductions. Allowable deductions are things that the government allow you to deduct from your gross salary before they apply the tax rate on it. That's why they call them allowable deductions. So it's allowable by law, and there are a couple of them which have not changed. For example, your pension contribution will deduct it before we apply the tax rates on your income. If you have a mortgage, we'll deduct your mortgage. If you have NHF contribution, National Housing Fund, or so, allowable. If you do this life insurance contribution, they will allow you to deduct it before applying your tax rate. So those things are still there. They didn't change those ones. I think the major change was on the Consolidated Relief Allowance. That they changed. That was so those allowed deductions are still maintained. So if you don't want to pay taxes, contribute more pension.
Yeah.
If you contribute more pension, it will reduce your income and you can fall on the lower band. Yeah, so what I mean is, if your gross is 10 million naira monthly and you don't want to pay plenty taxes, contribute 5 million to pension. And you earn it when you earn the money when you're old. So the more contribution you make towards your pension, so look at it this way, whatever your gross salary is, you deduct some allowances before arriving at the figure, what we call the taxable income. So there are some things that reduce your taxable income, e.g., a pension contribution. So you can make a voluntary contribution yourself. Instead of the statutory contribution of 8%, you can decide to make a voluntary contribution on your own of any amount. So when you make that voluntary contribution, what it means is that your taxable income has gone down. The taxes you will pay will be lower. So if you can survive on small salary, contribute more pension. Yeah, if you have a mortgage, that would also help. The interest on the mortgage is also a relief. If you do this NHF contribution, it's no longer compulsory.
Yeah.
That's also allowable. Yeah. And if you do life insurance contribution, that's also allowable.
Yeah, so all these deductions are still viable because they support, long-term employee welfare.
Exactly, long-term employee welfare.
Long-term employee welfare. So what do you think companies, employers these days, what should we do to prepare to adjust to these new tax forms, which take effect in January 1st, 2020?
Have a robust, your HR has to be top-notch for companies to keep themselves abreast with the law, either through trainings or reading. And they need to update the schedule next year. So you're not using the old template for last year, for 2025 and 2026, where you now be underpaying taxes. When you get audited, you pay the difference. And so make sure you do the correct deduction and you remit the taxes correctly so you don't go foul of the law. So it's just more of maintaining the good proper records, keeping tabs on the law and making sure that the deductions are accurate and the payment is on time. That's really what it is.
Yeah. So, and in addition to that, so the payroll team should also have this educate staff, maybe through town halls, through
yes, absolutely,
internal memos.
Yeah, of course.
Let's
just
try
like the high earners now, you need to start preparing your mind.
Yes.
Next year, things may happen.
Yes.
Yeah, you see a reduction in your salary. It's not that we did a review. It's not the company that's taking the money. It's the government that's taking the money.
That as well.
For those that are seeing increase, we're not the ones giving you the money. It's the government that's giving you the money. Yeah, so those conversations need to start happening with
and
the
also
employees
processes for the new rent
so
relief and all of that.
Aware. And start submitting everything required. Yeah, absolutely.
All right. Thank you, everyone. Thank you for joining us on this episode.
Thank you so much.
All right. Thank you, Collins. Have a nice day.